Yes, guys and girls, welcome back to another video. Today we are looking at combining the lower time frame and the higher time frame for entries. Now, this is my personal strategy. I like to always just go from that higher time frame, find areas of supply and demand. Then I go down to the lower time frame and then I'll try to look for a better entry just because it's better for risk to reward generally. But like I've mentioned like we've mentioned in many videos, it doesn't really matter what sort of strategy you use. It's all personal to yourself. So you might find, for example, Wyckoff easier, whereas I don't. I've never really used Wyckoff before, but we get the same sort of idea and these same sort of entries. So it doesn't really matter what sort of strategy you use. So for me, this is how I like to go from the high time frame down to the lower time frame just to get that better entry. Firstly, as we know, we always start on the higher time frame. So it'd be best if you started from the higher time frame when finding overall or finding areas to trade from. This is because you need to understand the overall trend and not be so fixated on current minor trends. So see different types of trends video for more detail on this, which is basically a video I made on what's the primary trend, what's the secondary trend, what's the tertiary trend. We tend to start from the weekly time frame to find out if there are any areas of supply and demand that we need to be cautious of. To us, anything below the 4 hour is seen as the lower time frame. Therefore, our higher time frame areas are weeklies, dailies, 12s, 4, 8 hours, 6 hours, and of course the 4 hour. We draw out a zone for us to then monitor an entry strategy, and whether that wants to be lower time frame breaker structure or two candle swing doesn't really matter, but we monitor an area and then we go for an entry strategy like the lower time frame breaker structures or a two candle swing. If fundamentals are suggesting that you need to be long the pair, then you should really only be looking for long positions unless you're trading tactically, which again we've made videos on. So if you say, okay, for example, like the example today, we're going to be looking at GBP USD. If we are saying we only want to be looking for sales in GBP USD because this, we're not looking for areas of demand. We're only looking for areas of supply in this example. So this is why you need to have your clarity on direction first before even looking at a trade, because if you say, and you're looking at then structure and technicals and you say, oh, I'm looking for buys here, but overall the market wants to be selling, and then you get stopped out, then you start blaming the market when in reality you just didn't look at fundamentals. So this is why you always do fundamentals, have an idea of what do you want to be long, short, whatever, and then you only go for the technicals that are within that direction. Like if we're only looking for fundamentally selling, we only look for sales in GU. If we're looking to buy euro dollar fundamentally because the ECB saying this or the Fed saying this, then we only look for demand candles. So this is why fundamentals removes any doubt out of your trades, if you will. Using the high time frame, it reduces the volatility of the pair and allows you to think more logically as you have less noise. Generally, as you know, we all know, as we should know by now, going on that lower time frame just enters more volatility. It's much more choppy on that lower time frame. As we drop the time frame, all we are doing is refining the previous time frame region. This way we can get better entry with a better risk to reward. We'll get onto that and what that means. So, as I mentioned, we'll start from the weekly time frame. This is GBP USD, by the way. Start on the weekly time frame. Can we see any areas of supply here? No, we can't. Areas of supply would be like, for example, well, there's not many here, but like this one where it shows an up and then a down. But we'll go in a bit more detail in just a moment. So there's no clear areas of supply that we were looking for at this point here. We then drop down here. So as you can see, this is the last high low here. The last high low before it made the high on the higher time frame. So technically, all throughout this period, it was still uptrending, regardless if it's doing this or regardless if it's doing this. It's still uptrending until we break below, which is this confirmed breaker structure right here. Closed below that on a daily, which is amazing. And then that is good. Some people may have entered here by saying that's equal lows, which is true. So it's completely up to you how, this is why trading's personal, right? I personally would have waited for a breaker structure, which we did. This is a trade we took a while ago, actually. And confirmed breaker structure, we then followed through, amazing. We then pulled back into some areas of supply, which we'll get into on that sort of in just a moment. But some people would say, actually, there's equal lows there forming, which is true. Therefore, I'm going to look to sell, which is also true. But for me, again, for my own personal strategy, I like to wait for some structure to tell me first before I get in. So as you can see, there's no clear areas of weekly supply regions there. We then drop to the daily. As you can see, because this is the confirmed break, now we know from a fundamental perspective we're looking to sell. now also from a technical perspective, it's also making sense. So you can see there's a daily region right there and a daily region up in there. So we draw out the zone from, in this example, from the open to the close. Some people incorporate the wicks. Again, there's no right or wrong answer. It's completely up to you. I've just always been taught to do it from the open to the close. I've never really incorporated wicks too much, although sometimes I have noticed that trades do hit the wick and then sell off, and therefore I miss the trade. So it's a catch-22 sort of perspective. So from the daily, you can see here, we've got a daily area of supply there, daily area of supply there. So we draw out our zones. Obviously, we didn't see all of this structure first, but previously, as we were seeing that pullback, we'd say, okay, there and there. We then drop down to the 12-hour, and you can see there's no real 12-hour supply regions. There's a tiny one there, which I suppose you can incorporate if you really want to, but there's no clear candles within that. So we then just drop down to the next time frame, which would then be the 8-hour. And as you can see, there's no real 8-hour area or supply region right here, but there is one right there, as you can see, right where this arrow is pointing, this up to then down. So 8-hour, extend the box up. What we mean by that is this box is quite shallow, as you can see, and then we then drop down to the 8, we have to widen it because we then have to incorporate this 8-hour supply region also. All we're doing within this box, right, is just finding an area for us to monitor the lower time frame. That is it. Or a 2-candle swing out of that region. So 2-candle swing, bang, bang, and then we enter, or wait for a break structure, then we enter. So that's all we're doing as we get to that region, or our region saying, okay, as price pushes into this area that we've marked out, we then drop down to the lower time frame to find our entry. That is it. Remember, just because it's hit your region doesn't mean it needs to sell off. So in this example here, which we'll go over, it hit our region, sold off a little bit, and then it pumped higher, and then eventually sold off. So it's something you just have to continuously understand, that it doesn't matter what box you mark out, markets doesn't have to respect that. And also, because price pushes into that, like this one here, you don't just click sell, because at that point you're guessing rather than having a logical approach. That's just a little thing to monitor there. So now that we've gone to the 8-hour, we've got this little supply region there and nothing really there. So just move down to the 4-hour. As you can see, there's a little 6-hour region there, but because, or this little right at the tip of my arrow here, just because the 6 hours is within the zone anyway, you don't have to do anything. No clear 6-hour region within this, as you can see. Perfect. We just moved down to the last one on the high time frame, which is that 4-hour. As you can see, there's tiny 4-hour regions within there, within the boxes. So that's fine. We just leave them alone, which is all good. So then that's all we do is we go from the high time frame, start from the weekly, daily, 12, 8, 6, 4. All we're doing is just monitoring a box. So in this example there, because we've gone from the, let me go back, the daily, and the daily, we mark out a region, and anything that falls just outside of that realm, like the example we gave here in this 8-hour, we just extend that box slightly, because some people would say, I'm going to sell it from the 8-hour, when others would say, I'm going to sell it from the daily. Well, if you sold it from the 8-hour, you would have probably missed the trade. If you sold it from the daily, probably would have got into the trade, for example. So this is why we're monitoring just structure within this region. So now that we've gone down from the 8 to the 6 to the 4, what's our next point? Well, now that we've got regions, logically we say, okay, we're now going to go to the lower time frame once we hit that zone. So we go down to the lower time frame. Now that we found out areas of supply we would like to sell GBP USD from, we then go down to the lower time frame to find the best risk reward. Please remember, there's no right or wrong answer here, and anybody who tells you it's wrong clearly hasn't been trading long enough. What I mean by that is, as you go many years into the markets, you'll understand that every strategy works. Doesn't really matter, as long as you get the same region, you're good to go. The same area that other people are looking at, the big traders out here. So it doesn't really matter what strategy you use. If somebody tells you that's the wrong strategy, they're lying to you. They're trying to sell you a narrative, basically. Trading is personal to yourself. If you'd like to enter aggressively, so be it. Just remember, risk management is obviously the number one priority there. We then drop down the time frames to find our lower time frame structure to potentially enter from. From the 4-hour, you then go down to the 1-hour and repeat the exact same process you've done on the higher time frame, just making sure we have structure in mind. What we mean by that is lower time frame break structure, lower time frame pull back, lower time frame entry, get in. That's what I mean by that. Now, this is GBP USD. This is, by the way, this zone is this zone down here. I'll just speak about this zone as well in just a moment. But the lower time frame is just within this box here, which is this one here. So let me just go through just so we can understand that. So as we see here, saw some reaction out. From a 2-candle perspective, obviously you do 2-candle swing entry. You wouldn't have entered because this last sell candle didn't close below the wick. But as we know, Drew has made a video on that. So please watch that in your own time. But that's another entry strategy. So just work out which one works for you. This may not work for you. Again, it's personal. This is just a personal strategy that I've sort of developed, if you will, over the period in which I've been trading, which is 6 and a bit years now. Yeah, we have this high low here. Remember, structure in mind always. We've got the higher low because that made the higher high. So therefore, we wait for a breaker structure out of this level, closing below this higher low there. Perfect. Some people would say this is a double bottom forming. Fine. Yeah, I mean, absolutely. If you want to get in on that sort of perspective, fine. Again, no, I'm not going to argue against that because it's also another way you could be trading. Some people would say that's double bottom liquidity below there. Some people would say that's a higher, head and shoulders forming. You can see both strategies are suggesting the same thing, right? So anybody that tells you you're wrong is obviously, like I mentioned, lying to you or trying to sell you something. But we created a double bottom there, or in my example, I would always wait for a break. Sometimes I would enter on this double bottom, just depends on sort of how well I'm feeling with how much aggressiveness I want to get in on the trade. That also will depend on kind of how my previous trades have gone. If they've gone really well previously, then I'm more likely to take a bit more of an aggressive approach because I want to squeeze out better risk to reward. If I've taken many losses, for example, you do go through loss ruts and win ruts, meaning sometimes you take losses after losses after losses and it just happens. I'll wait for a bit more clearer signs from a structure perspective. So in this example, we wait for a breaker structure below this higher low there. We then, some people would say there's double low, forming right there and there as well. Perfectly fine. We then pull back. We'll always wait for that pullback. Perfect. There's no clear 1 hour region within that. So we leave it alone. We then, okay, no 1 hour, fine. We drop down to the next time frame, which is the 45 minute. As you can see, there's a 45-minute region within that. Perfect. We then stops will be above the highs there. They won't be above this high or this high because we're going on the high time frame and we're looking to hold that for, like I mentioned, a longer time. You are going to need to have a slightly wider stop, but you're going to get the good risk reward anyway. You just have to wait a bit longer. As we know here, this is the last high low on the lower time frame, which is there. Bang, double bottom there, if you will. Perfect, absolutely. Breaker structure there, pull back into this area of supply, sell, perfect. We saw some rejections as well, perfect. We look to sell that, stops above the highs. We then drop down to just the 30 to 15 minute, just to clarify if that's the region. There's no clear 30-minute region or 30-minute candle within that. We'd use this area as a re-entry point, which is basically just a break, pull back into that. And on the 15-minute, the reason I say 30 to /15 is because you can basically understand what the 15-minute is doing by looking at the 30-minute time frame. Now, we obviously then got stopped out there, but that's fine because we have another region above that and we just repeat the exact same thought process. The issue with this one here is what? Some people say, oh, I'm looking to sell, blah, blah, blah. Well, have we come into a higher time frame region here? No, there's no box within that, so why am I looking to enter? We didn't even break any structure there anyway, so why are you going to look to sell that, for example? So this is why you always have structure in mind. So in this example, we then got stopped out. I mean, absolutely fine. We then go to our next region, which is up here. Now, as you can see, some people would say, oh, down here or double top there, perfect, or double bottom there. Well, number one, ask yourself is, are you fundamentally looking to short or long? This is why it removes the clarity. Because some people say, oh, look, double top there. Okay, we need to buy to take out that area before we move low. Well, not necessarily. We don't have to do that. In this example, we didn't do that. So this is why you have your directional bias first to say, okay, I'm looking to sell, therefore I'm only looking for supply regions, or I'm looking to buy, okay, I'm only looking for demand regions. If you were looking to buy that, fine. This demand region right here on the 1 hour, absolutely amazing. But fundamentally, it wasn't really making any sense to go long GU on the higher time frame. I'm only thinking on the higher time frame here. I'm not thinking, oh, I'm looking to get in and out within a few hours or maybe a day or two. I'm looking for weeks or maybe even months at the best. But in this example here, what's the last high low within this region here? This one here, we created a double bottom right there. I remember entering this one because of this double bottom. We didn't have a clear breaker structure out of that from my knowledge there. So that is the video. Hopefully that makes sense. You do exactly the same thought process for every single pair out there. Just do a bit of back testing just to see if it works for yourself. If it doesn't, fine. You know, you'll mold a strategy. That's personal to yourself. So that is it on how you go from the high time frame down to the lower time frame. See you in the next video.